My name's Joshua Scigala. I've been in the crypto space for a very long time. I started actually before Satoshi Nakamoto released his white paper, trying to develop a digital currency on a platform called SwapStyle. It was the first swap site where people swapped clothes instead of buying and selling, because I was always very fascinated by alternative economies. How can we deal with money without money? And you know, coming from an artist, intellectual family background, I always thought that money was the root of all evil. You know, this ridiculous notion that money's the root of all evil. But what I realized very quickly is that it's the creation of money and how money is created, that's the root. Because it can be created extremely badly and corruptly, and it can be created amazing. So for instance, if you find some gold in the ground, it's found and it's spent into existence. It doesn't have to go back to the ground with interest that doesn't exist. Bitcoin is not a rare metal, but it's a rare number. It's found by miners and spent into existence. And you know, if a lot of people think rare numbers, that's funny. I don't get that. No, it can't be real. But actually, it is real. And if you talk to a mathematician, they'll say, yeah, of course, it's a rare number. It's a hash that's trying to be found. Which, you know, that's nothing to do with the drugs, by the way, the hash. So what we do is we run a crypto commodities exchange. It was the first one in the world. It's still the only one that's properly doing it. We're a full order book between physical allocated gold bullion sitting in a high security Swiss vaulting facility, one of the largest in Europe, called Vaultoro. They are fully audited and fully insured. And what people do is trade between Bitcoin or cryptocurrencies and that. So I wanted to find a price discovery mechanism based on a physical asset rather than fiat, because I got into Bitcoin to get away from fiat, and now we're sort of pricing everything still in fiat. I also lost a lot of money in Mt. Gox. I don't know how there we go. Yeah, there's the exchange there. So there's a typical order book exchange. That's a very old slide. We've got a new version coming out next year in February, so that's very exciting. So I lost a lot of money in Mt. Gox, which is a large exchange. It was one of the first Bitcoin exchanges. And the reason why it went bust was because it had no transparency at all. As it had what it's looking like is that they had a hack into the exchange. That doesn't mean Bitcoin was hacked. Bitcoin is a protocol separate from exchanges. It's like saying, you know, because a lot of the articles, for a lot of people that don't know what crypto is, they think, oh, an exchange has been hacked, that means Bitcoin's been hacked, but it hasn't. That's like saying a bank was robbed, the Australian dollar was hacked. It's not the case, they're separate. But what we realized is Mt. Gox had a little hack. The hackers stole some Bitcoin from the exchange, and then Mt. Gox tried to became a natural Ponzi scheme where they needed to get new people into trade to try and make up for the hacked coins, and it's just spiraled out of control downwards. So when that happened, I decided to build the most transparent exchange in the world. And so what we do is we give everyone an anonymous ID, and so they can log out of the system, so we don't know that they're checking. And then they can check their gold holdings and their Bitcoin holdings, and then they can check the sum of everybody's holdings, and compare that to the auditing certificates, the statements from the vaulting facility, and also the insurance paperwork. On top of that, they can check the cold wallet addresses. These are Bitcoin addresses that hold the Bitcoin that we have. So they can see publicly on the public ledger, aha, they've got that much Bitcoin, they're at or above reserve. But enough about me. So I'm here to talk about a subset of cryptocurrency that is called stablecoins. Now, everybody's heard constantly that Bitcoin is extremely volatile. It can't possibly be money because it's ridiculously volatile. And this is true for now. Now, I really think that Bitcoin is actually in a price discovery phase. It doesn't know what we don't know. The market doesn't know. What is this thing worth? Is it worth the potential on paper mathematics, which is like $1 billion a coin, because there's only 21 million of them and there's more than 21 billion whatever the math behind that is. But it can be potentially ridiculously high, or it can be zero. So where is the value of this thing? So people are speculating on what this value is. So of course it's very unstable. Maybe in 5 years, once it hits a much larger volume, it'll stable out because, of course, if one Bitcoin's worth $3, it's very easy for it to go to $5, and that's already a huge percentage rise and a huge percentage fall. But once you start getting to $1 million a coin, it needs to drop a lot further to move the same percentages. So we start to sort of even out. But until that time happens, we have these things called stable coins. And stable coins are basically cryptographic tokens like Bitcoin. They are digital assets that you can send one and you know that the person that sent it to you doesn't have it anymore. This is the fundamental invention of Bitcoin, right? Excuse me. If you sent an MP3, the other person doesn't know that you don't have that MP3 anymore. So Bitcoin invented the fact that I can move a digital thing and you know that the other person doesn't have it anymore. It's uncopyable. And so what do we do if we actually tie it to something? Let's say we take a little bit of a cryptographic token and we say that equals $1 that we'll put in a bank. And this is what a company called Tether has done. And they now have a supposed $2.8 billion sitting in 2 bank accounts. Oh yeah, I've got this slide here, so maybe we'll take a little iotus into what money is, because I think this is an interesting part of Bitcoin, and it also ties into why stablecoins are a bit silly. So a lot of people don't understand when they talk about a certain country's in debt, and they say, who's it in debt to? And they're indebted to this other country, but that country's indebted to that country, and every country seems to be indebted to each other, and there's just debt everywhere. And people don't understand what does that mean, and what is a debt-based currency anyway? So we have this little island, and on this island live a couple of people, not very many people, but they basically trade coconuts. They swap, like we were talking about before. They don't have any money. But one day, this mafia here declare themselves a little government, and they decide, we've invented this new thing called money. It's going to be fantastic. You guys can now trade bits of paper and use that as currency. So Quinton and Uma are very interested in this. Quinton says, tell me more, and he gets convinced. He says, all right, I'll have the first. Let's do it. So how do I get this money? And the mafia say, well, we lend it to you. We lend you $10. Okay, righto. Well, now what happens? They say, well, but you owe us 12 back. You owe us 2 extra. And Quinton says, hang on a minute. But there is only 10 on the island. What's going on? How can I pay you 12 if there's only 10 on the island? He says, well, of course, you have to wait for Uma to borrow 10 as well, and do a trade with her. Try to get 2 off of her. Okay. So that's, of course, what happens. He takes 10, has interest of 2, liability of 12. Uma does the same. And they do a little bit of a trade for $2 coconut. And, Quinton's now debt-free. He's paid off the bank with his 12. But what do we have? Uma is now stuck with $8, and that's the only liquidity on this island, and $12 is owed. So as this goes on, she needs to borrow from Quinton again. As it's going, this spirals down until there's no money left on the island and only debt. If you zoom out from that island, they look kind of like Cyprus and Greece. And you have, Cyprus being bailed out, or bailed in, actually, at 10 billion, and also a bailout. So there was this big sort of corrupt mixture there. Greece at a sum of 330 billion. In fact, Greece was giving up islands and actual hard assets for this paper that the European Central Bank would just print. So it's an amazing scam. And of course, we've all seen the pictures of Germany during, and now in Venezuela, we see that as well. And in fact, this is a picture that went around of a convenience store owner in Venezuela in 1998, and now in 2018. It's very, very tragic. Our CMO at our company is from Venezuela, and he sends money home to support his family. Sends Bitcoin, actually. So the average weight loss in Venezuela is actually 11 kilos per person. So here we have a nice graph. This is the gold chart versus the dollar. In 1933, of course, it came off the gold standard, and you see a large drop in the purchasing power of the dollar. In the 1970s, it dropped further as it went off the global gold standards. People couldn't redeem their dollars globally anymore. And then, of course, in 2001, everyone woke up and realized the world was a bit of a mess as the trade towers fell. So as gold boomed. This is just an interesting graph because this talks more about asset-based money instead of debt-based money on this little island. Asset-based money isn't just lent into existence where somebody needs to pay back to this bank. It's just money. So if we take this amazing invention called Bitcoin and get rid of the Bitcoin, get rid of the free market deciding what the price is because that's way too volatile, and let's attach a US dollar to it. Well, first of all, it's really handy because traders can use that for arbitrage opportunities. If Bitcoin's trading lower over in Hong Kong but higher somewhere else, they can move these dollars instead of bank transfers, which take a ridiculous amount of time. We're still using 1950s technology. I mean, we're literally, the SWIFT system, when it was built, they were using the phones with the massive battery packs that you were carding about. And it literally hasn't changed since then. You've still got this settlement period of 3 days. And internationally, sometimes 5 working days. So it is very handy. You can shift large amounts of USD across by just moving these cryptographic tokens that represent one. And the company promises how they peg it is they promise to always buy 1 for 1. So, if it goes above price, there's an arbitrage there, so someone can take a bunch of Tether and sell it to the Tether Corporation, and they'll buy it back for that $1. $2.8 billion, they say, right? That's sitting in 2 bank accounts. And this is craziness. First of all, they're unaudited. I talked to the auditor who was fired, who never got to audit these bank accounts. But let's give them the benefit of the doubt. Let's say, okay, it's there. And this is only Tether. There's a multiple bunch of stable coins based on fiat. Let's say that money's there. Well, what problems does that come up with? Well, first of all, there's no transparency at all. And again, like Mt. Gox, who knows? They're speculating with it. So the underlying asset of these banks are being speculated with. So if you have something that's backing something, and that something is being speculated on at the reserve figure of 95%, and in Europe it's 99%. So in 2006, the European Central Bank said, you only need to hold 1% in reserve of the bank. So we're sitting with a bank account that's going off and speculating on these massive derivative bubbles and what else. And on the other side, you've got the crypto market, which is just a big casino and speculation funhouse as well. So it's ridiculous to have these 2 markets both speculating independently, but somehow pegging each other. And a lot of people say, well, it's in a big bank. I trust this big bank. It's so big, how can it go wrong? And we all remember, Lehman Brothers was the biggest bank in the world. And on Friday it was open, and they would have laughed at you if you said, I think Lehman Brothers is going to go broke. Freddie Mac, dead. Are you kidding? They're massive, multi-billion-dollar corporations. Nah, Monday morning, dead. So these things happen, right? These things happen. And it's really, really important to remember that they are totally intransparently gambling with all these trillions of dollars of derivatives. And if you've seen the Dow Jones recently, have you seen that little massive curve up? If you zoom out a bit, it looks like a Bitcoin bubble, except it's dealing in trillions. So what happens if those bank accounts do go bust? Well, good news is they're insured. So up to 100K each, and they're in 2 bank accounts, $2.8 billion in 2 bank accounts. So, these stable coins are all of a sudden worth 200K. Yay. So, I mean, it's a joke. It's ridiculous, and it's just, I just can't believe people take it seriously. Now, another fun game that banks like to play, and you've been in cryptocurrency for a while, it's probably happened to you, where the bank just goes, somehow connects some dots and says, oh, cryptocurrency frozen. They're going to freeze your bank account. Or they give you 18 days to take your money out. But they usually freeze it because that's a fun game, because they freeze it and they can go off and continue speculating with those funds. They can continue playing and having that on their deposits. Meanwhile, you can fight for it for a year until you get it unfrozen, in which time you get 18 days to remove the funds. The other problem is that if a bad actor was to use one of these stablecoins on a black market somewhere, let's say they bought something illicit, the cops swoop in, say, what is this? And they say, oh, that's a stablecoin in this bank account, right, freeze that bank account. Suddenly, the entire economy collapses because they've frozen, for one bad actor, the entire 2.8 billion. IP here, so all of this is mine. And this is about allocated and unallocated. You cannot have allocated bank accounts. The bank accounts, when you put money in a bank, it's not your money, it's the bank's money. It's not allocated to you anymore. That's why they give you some interest. It's a really important part here because, and this goes back to the bad actor. If you have a bad actor in the space, you really don't want the police to come and take down the entire economy. And this is why Bitcoin's good, right? Bitcoin's not backed by anything. It's just backed by the network effect of people wanting to accept it as money. So if someone says, yeah, I will accept your Bitcoin, they have some value, and I decide the price compared to the other people in the market, and we decide. The other problem with fiat as a stablecoin is that you have the concept of it being very, very un-Australian to hold, Russian ruble or American dollars. In Australia, it's not that bad, but in Russia, Russia's collapsed 3 times in the last 30 years in terms of their currency. So during that time, and I've talked to many people, I said, how did you get through that? How did you get through that crisis when other families starved? And they said, well, we had gold and we had some US dollars, but we could not tell anybody that we had US dollars because that was almost treason. And you can see that now with Erdogan in Turkey. He's telling everyone, buy gold, drop your US dollar. He's being very, very full on, making it a full-on patriarchal argument. There's also different types of stablecoins. One is called the MakerDAO DAI, it's called. And what you do here is you take something very unstable, like Ethereum, which is like Bitcoin, but it's slightly different. And you basically over-collateralize another smart contract. So to get 100 of these stablecoins, you put in 150 worth of something. So if the price moves, it's all right because you've can't speak. I've had 4 hours sleep, jet lag. This token, and this has got problems because if there's a black swan event, like Ethereum suddenly drops more than I really can't say it. The more than the collateral. And within that smart contract, then you will see other problems with this, right? So this is all very experimental, and this is wonderful that we can have experiments. Because for the first time in history, we can have economic theory tested in the real market without gulags, and that's pretty good. Because before, if you wanted to test something, like Marx wanted to test communism, you had to go to a geographical region, you had to border people off, and you had to force them by the gun to say, hey, you're all going to share now, you're going to test my economic theory, it's great, it's going to be fantastic, you're going to be super happy. Nowadays, we can release a coin and see, hey, this is a demurrage coin that every 6 months, if you don't spend it, it starts to redistribute the wealth. Let's see if it works. It didn't, it just tanked. But it's an experiment, and that's great. Another one is Digex. This is a gold-backed stablecoin. This is an interesting one. It was the first one to try a gold-backed coin, but again, it's not truly allocated. They say it's pooled allocated, but there is a problem with that, and that is that if you have some Bitcoin, you will have the first major transaction in Bitcoin was a 10,000 Bitcoin pizza that someone bought 2 pizzas for 10,000 Bitcoin, and this is a famous transaction because they're worth millions and millions of dollars. These Bitcoin that was spent on 2 pizzas, right? But and this is a famous transaction. If you have a little bit of Bitcoin, you probably have some Satoshis of that transaction, because what happens is it defragments all the time. I send you 1, you send 50 over here, 0.5 here, 0.5 there. They send 0.2, and then I get back 1, and it mixes constantly. So if you have a pooled allocation and you have an allocated bunch of bars and serial numbers, and after a while, a person that has 1 gram might have 1 milligram in this bar, 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 basically a milligram in every single bar in the vault. Now this person's a bad actor. They go off to some black market and buy a bunch of guns, and the cops swoop in and say, hey, what are you doing? What is this? They open up the smart contract and say, okay, you own this serialized bar. Okay, we're taking that, seizing. Oh, this one, seizing. Oh, look, we're just going to seize all of it. Problem. So these are issues that we're going to have to deal with. Oops. Sorry about that. Sometimes a bit crass. This was in Europe. People are used to saying that word. So this is where what we've done at Vaultoro is we're starting to look at stablecoins, because Tether is a very, very important part of the ecosystem. It's totally flawed, like all the problems we were talking about, but it's a very, very useful thing. So we running an exchange, we've decided now to tokenize, because when people buy gold, it's just in a centralized database in a ledger. Your number is allocated to this bar, and you can trade back and forth. But you can't take it out of the exchange. You can only trade it back to Bitcoin and then send that value. But this is what we want to do: is how do you have a fully allocated gold-backed token? Well, first of all, we deal in smart bailment contracts. As bailment law is a very, very old common law. It's about, you have a bail or bailee arrangement where you own something, you physically own something, it's your legal property, and you allocate it to somebody to look after for you. And this is a very different relationship to when you put money in a bank. When you put money in the bank, like I was saying, they own it, and they pay you for the right to own that and do with it what they want. It's their property. So we've built a smart bailment contract, which is basically a bailment contract in code. What we're doing is building a multi-token economy. So to build this out, we're raising funds, and this is through a utility token, which is it's a type of token where people. It's like when you go get your coffees and you get a stamp every time you buy coffee, and then the 6 ones free. But instead, what it does, it allows you a voucher for cheaper trading, but it also allows you to earn some. I don't want to call it a dividend because it's not, but some payment from the stablecoin that we're creating. So as these stablecoins move around, a tiny fee, fractions of a percentage will be sent over to the people that help us fund this project. So this protocol allows us to talk to vaulting facilities around the world and help them tokenize their assets. We talked to a vaulting facility in London. They've got a large chunk of palladium sitting there, and they don't know what to do with it, and they want to tokenize it. They want to allow this to be liquid, and tokenization is good because it allows it to be liquid. So this protocol will allow vault holders to do that. But this is the important part. How do you stop it from this fragmentation problem and a whole economy being taken down? Well, first of all, you have all the assets insured. That's really, really important. So if the Ocean's 11 team managed to get into the Vaultoro facility and steal everything, then it's still insured. And you have it audited. And you use the blockchain to show these auditing records. And this is another thing we're building is hardware modules that sit under gold pallets that register into the blockchain every time there's a air temperature change, air pressure change, or weight change within these. And every time that something happens, there has to be an explanation of why that happened. So, you know, the insurance company gave a window of time where the vault's allowed to be opened. This is why it was opened, and this is why the sensors detected that. But how we're fixing the defragmentation problem is by allocating it to a certain amount of a certain gold bar, and as it becomes fragmented, if I send 1 gram to you, sir, I would send that, but it would go to a smart contract first. And if anyone remembers the old bus things where the bus conductor would have all the different tokens in the different coins in the different derivatives, what this gold coin would do is go up here and sort out into the different gold bars and try to find the biggest bar according to how much you want and send you the biggest bar. So that if you are a bad actor, the enforcement agency can only take that bar because allocation law is very, very strong in most civilized countries. So they can say, okay, you own this bar, good, right, we're seizing that. And if that's owned by a few people, we as a company can replace that bar and eat that. But, you know, at least we don't have the issue of the entire stock being tainted. So the other good thing is, of course, gold isn't seen as some sort of unpatriotic thing. It's seen globally as a good store of value. And, you know, there has been times where countries have banned gold, well, America. But the good thing about crypto is you can hear whisperings. They're starting to get a little bit tyrannical. I might just sell the gold in that vault, move it into crypto and send it over to Switzerland and buy it there, or move it from Switzerland to Singapore. You can do this very well. And you have a marketplace instead of an OTC. Instead of one single buyer, you make sure you have a marketplace because there's always a buyer thinks, no, they're not going to shut it and they'll buy it. So it's very, very important to have different marketplaces discovering a price instead of one single party. And yeah. So this is a little slide of the new trading platform. I don't know why it's in there, but I thought I'd show you if you're interested. We're giving the ability to have a look at your assets in one single slide and also export that for ease of taxation and to, you know, as much as we hate taxes, but you can export it to your accountant, and because that's a real pain in the for accounting crypto profits and stuff. So we're making it easy to allow your accountant to look through that. And here we have the V-Gold, and that's what we're working on. So yeah, if you want to find out more about us, we've got a chat through a program called Discord, and it's like Slack if anyone's used Slack, but it's a bit more fun. And we all talk about concepts around economic theory, around crypto. We also do some price analysis on there, but we're also talking about how we can move forward by allocating gold and how the gold industry can move forward in this process. And I think the gold industry has a real big chance and should not fight crypto. Should not think that crypto is against gold or Bitcoin is some sort of adversary. It's not. There are so many chances to tokenize gold underground, you know, and seeing what Metallicoin's doing, and there's such massive opportunity in this space for miners to profit from this and make gold actually a medium of exchange again instead of a store of value. And you shouldn't, as an industry, we shouldn't put our fingers in our ears and sing la 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 that it's not happening, because it's happening and it's there and it's a good thing. And we need to see the opportunities and not just go, I don't understand it, and look away. It's really, really important. So yeah, thank you very much.